Good morning, Fractal Effects team. We're just tracking the market from the early move. But please make sure you read the disclosure in the footer of fractaleffects.com before we get started. So if you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So what we had was an upside expansion model and a buy model. Our manipulation move was to the downside first, hitting the end dog, and a small sliver of a 4-hour fair value gap. US 500 did not take those lows, which let us know that this also wants to push up as well. Then we had our 5M fair value gap created here. That was the first one. It did not get tapped. Here was the second one. Came back and got tapped. And then we had a 1M tap as well. Oops. And now we're heading up to that 4-hour. I'll show you the 1M really quickly. So that was our 1M. Came back into the range, tapped it here, came back up. Remember, hit a fair value gap, create a fair value gap. So there was our first 1M fair value gap, or second one, sorry, I should say. Came back, tapped that. Closure over series of candles, that was the entry. And we've already got the 1 to 3. That was our entry. 2 ticks below the low, right here. Sorry, that was our entry. That was our, got out at this candle pretty much right here. That was the morning move. We're close to getting our bullish confirmation. And those 4 hours fair value gaps are the next ones in sight. Now they have been tapped, so we're just going for those highs. We've had a double break to the upside as well with US 500. So US 500 is the one that I'm watching because it's closer. So US 500 is right by its DSD high and that 4-hour fair value gap. It could have a pullback, but that's the target for it. Now that we're past 10:30, we're just waiting for that confirmation because a retracement's coming. All right, it goes confirmation, retracement, then extension. There's a high probability that we're going to get a retracement right after confirmation. That's why if you're going to do the early move, you want to be out of the market by 10:30, hopefully. Otherwise, it's fine if you got in down here, but just expect there to be a retracement. So you want to at least be moving your stop losses to break even and or taking some off the table, because that retracement is going to obviously cut into your profit and could potentially stop you out. That's why these two strategies work in unison together, but you want to make sure that you're being respectful of their opportunity window. Even after a double break, we expect a retracement. So it looks like we might just hit that before or as we get our confirmation, possibly. So there's your DR confirmation. US 30 confirmed as well. So did US, sorry, did NAS. So now expect that retracement back down. So we've left a string of fair value gaps here. But it could retrace all the way back down to the blue zone, 20 EMA. So it looks like we're getting that pushed down now. That's why always be respectful of that confirmation. 80% chance as soon as that confirmation, as soon as that arrow hits, you're going to get a retracement back into our zone. So technically this is the top of our zone. So we've already satisfied that condition. Now is there a 75% chance it'll cross this dotted line? Today is FOMC, later, FOMC press conference. So it's going to be a short session. I just want to see a retracement and a follow-up into here. But we'll see. Otherwise, I could just hit this target. And we'll conclude there. We're not going to stretch this too far today. Maybe we'll take a look at oil. Those are the targets. There's your retracement. We had the crossover here. So we have not touched the 20 EMA since we've had the crossover. I'd like to see it come back down, hit that blue zone, touch that 20. We'll see if we get a rejection anywhere else. The closest first 5M fair value gap was right here that it just touched. That's too shallow. This thing's been running for a while. Did we even touch it? Not quite. Didn't even touch this first presented 5M. Here it did on US 500. US 500 is the stronger of the two pairs. Has been since down here. It didn't take out the lows. Remember, that just adds more confluence. If one pair, when you're looking at two diverging pairs, if one pair takes out the lows to the manipulation side, meaning you have a buy model, upside expansion model, and then you manipulate down first right into a key zone like the end dog, which we did today, and a purple zone, and a 4-hour fair value gap. When you see that model and the other pair doesn't take those lows, doesn't take the lows, and it doesn't cross the manipulation zone. Let me just back it up. That was the manipulation zone right there, that green line. Remember, our indicator paints that out for you. Every session has built within it a manipulation where they make a false move, trap your money, and then go in the opposite direction. This indicator paints that out for you. No other indicator does that. We sat down with a chaotician to figure out exactly where that manipulation zone is, and it's different every day. So it's doing all the computation for you. This is a forward-thinking indicator. This is not a time-lagging indicator. It's painting these zones out for you in real time. So we did not take the manipulation zone here. And we began to push up. We had the first 5M fair value gap. Got to stick to the model. Took it. You could have taken any one of these as your target. These highs, the blue zone, London highs. You could have taken partials. And now we have a bullish confirmation and a double break from from US 500. So US 500 already gave us a double break. We have a double break here as well, actually. So this candle gave us our double break to the upside. Just want to confirm that actually. So the high of this candle. $867.44, 867.69. Yeah. So this is our double breaking candle, and we have a bullish confirmation. What does that mean? That means you cannot sell this market. Both strategies are telling you you cannot sell this market. Doesn't mean you can jump in immediately either, right? Always look for a foothold. So if you didn't get in down here and already take your profit, then the second entry would have to be upon retracement back to a key zone. I'm not a fan of this 5M fair value gap. I want to see a deeper retracement back to the 20. because that's our target. There's no room to grow here. So I need a retracement down here where I can at least get a 1 to 3. And if you don't get that retracement, then we don't really miss out. It just keeps going. And as soon as we hit this, we'll switch over to oil and take a look at what's happening over there. About 14 minutes away from 11. And keep in mind there is FOMC press conference later today. I believe it's 2 p.m. Eastern Standard, 11 Pacific. On FOMC press conferences, we usually don't look at the indices. We usually stick to U.S. oil. But we saw the move set up early enough. And our time window should save us anyways from being anywhere near, or being anywhere in the markets near that time. Let's see if this gives us a deep enough retracement now. We're getting a lot of gesticulation here, but as mentioned before, I'd like to see it come back and touch the 20 EMA. I want to see it come back to one of our key zones as opposed to one of these little sliver 5M fair value gaps. Unless it gesticulates here long enough and then our 20 EMA moves up. And when you're using divergence, I've said this many times before, Whichever pair hits that target first, that's when you take profit. If all of a sudden US 500 shoots up, takes out these highs, and hits the DSD high and this 4-hour fair value gap, and NAS is still just drifting right here, unable to climb, that's your take profit, regardless of which pair you're trading. It's the whole point of divergence. That means they've just swept these highs, and maybe they don't want to with NAS, and they want to drop them both. So when you're using diverging pairs, use them correctly. Some people only use it to figure out where their targets are going to be or where to jump in, but they don't realize that as soon as one of these hits take profit, that's take profit for both of them. Looks like we might be getting that deeper retracement now. I want to see it punch past this fair value gap, come down most likely down to the blue zone, tap that 20, maybe even create a bearish fair value gap, which we will then use as an inverse to climb up. 7 minutes till 11. Just gotta stay patient. Pushing down further past that 5M. US 500 finally punching past that fair value gap. Since we're above the blue zone here already with the 20 EMA, I'm going to make that our fair value gap of interest. This was a pretty big move up, so I'm going to take the low here, drop a Fibonacci just to see where we might possibly retrace to. So 61% would put us right inside the NYC opening gap. Assuming same thing here. Let's see. Looks like we're getting a rejection here, but I'm not interested there. There's no room to grow. Plus neither pair actually came back to touch that 20 since the crossover. So we're at 11 o'clock. We're going to keep watching US 500. I just want to take a look at oil real quick. So these are old levels from yesterday. It's a 4-hour. So we had a downside expansion, sell model hitting the DSD low, taking out Asia highs, and then it finally crashed. Now where is our manipulation zone? So there's our manipulation zone high, and there's our manipulation zone low, right inside the blue. We broke up high first. Just want to check on a higher time frame. So we had an immediate rebalancing candle here. There was a 4-hour that we hit. And we took out those highs. So we had taken out these highs. So we had a double break into an NWOG, new week opening gap. That's where we rejected from. We took out the 4-hour highs. And even though we had a double break with this candle, what do we do when we get a double break? We wait for a retracement back to our key zone. NDOG was a great area. We had a spiking candle, but as you can see, no 5M fair value gap was created, nor here or here. That's usually our foothold. So we didn't have a foothold, and then before you know it, this massive candle. I'm not sure if there was any oil news today. That is a massive drop. Do we have any oil? FOMC, federal funds rate. Make sure you're checking all the calendars as well. You want to check the energy calendar when you're looking at oil. So US crude oil inventories. There you go. That's what pushed it down. Minus 11.5. Go take a look at these numbers again. US crude oil, distillate inventories. So anyways, that pushed us down. So we didn't have a chance to even enter here. And then it gave us, actually we have no confirmation yet, but we came all the way back down and hit the 4-hour fair value gap, took out these lows, and now we're at the DSD low. So both DSDs have been violated. You just have to wait for a confirmation. Let's go back to NAS. Still has not come back down to the 20. 24 minutes left. And this kind of a day was kind of expected on FOMC, press conference, anything that says FOMC on your calendar. You want to make sure either avoid it altogether or proceed with caution. Outside of the morning move, I actually wasn't interested in taking a look at the indices. But this might be a great case study just to show you guys. That the rules don't necessarily always apply when you have FOMC day. Here we go. It's finally making a move for that 5M fair value gap and that 20 EMA. So we got US 500 on the right, NAS on the left. So US 500 was the stronger pair. Remember, it was the one that didn't take the lows. It gave us a double break first. I believe it even confirmed first, or they did at the same time. So when you see the weaker pair, which is NAS, become suddenly stronger, that shows you a shift happening. So although NAS did just take out these lows, this candle's lows, we want to see it actually pull back to the 20 EMA and then potentially give us a setup. But we want to make sure it all happens in the next 23 minutes. That's your window of opportunity. Do not sit there staring at the market all day long. That is not how our strategy works. Maybe that's how some traders work. Hours and hours of just sifting through different assets. All you do is set your alerts. The spotlight strategy lets you know when a confirmation has happened. So anybody who got in on the early move, they rode it from here all the way, got their 1 to 3 risk to reward. And as we said, right at the confirmation, there's an 85% chance. Remember, we are probability traders. That's how this strategy works. 70% or higher. Otherwise, we don't take the trade. And as soon as you get that confirmation, there's an 80% chance that you're going to retrace back into the range. That's what the 20 years of past aggregated data shows us. Neither pair has hit that 20 EMA yet. That's what I'm waiting for. Looks like we're getting closer and closer to that 20 EMA. Let's see. Just got to remain patient. Wait for all points of confluence to be met. About 18 minutes left in our stream. We've tapped that 5M now. I want to see it touch that 20 EMA first. If it leaves without us, it leaves without us. So we're getting some reaction off that 5M fair value gap. So US 500 did give us a bearish fair value gap right there on the 5M. You can use this as an inverse. Let me get rid of this one. Same thing here. There's your bearish 5M, which we'll eventually use as an inverse if we're going to climb back up. Looks like it's pushing down even further, trying to get to that 20 EMA. That's 13 minutes left. I'd like to see it hit this blue zone and give us a 5M bullish fair value gap that lets me know this thing really wants to push up. This late in the game, FOMC right around the corner. That's what I'd like to see. If you choose to trade on days like this, wait for every bit of confirmation. The early session was perfect, literally too perfect. We took the manipulation move to the downside. We had a buy model. We had an upside expansion. We took the first 5M fair value gap. That was the entry. That was our exit. 1 to 3. Done. Now you get a confirmation up, still an upside expansion model. Actually, sorry. A trumpet model. Bullish confirmation double break. Neither pair has hit that golden area. But you got to proceed with caution. All the confluence has to be there. Today's the day they're going to do the most amount of manipulation. I want to see it hit this blue zone or bounce off this 20 and give me a 5M bullish fair value gap. And sadly, even after all that, there might not be enough room to grow. You want to make sure you have your 1 to 3. I'm only aiming for this target right here. That's the 4-hour high. So my entry has to be somewhere down here in order for me to even get that 1 to 3. It has to be lower than here. Right here. So this makes a good zone. If I bounce off of here and get my 5M fair value gap, then at least it makes it worth it. Otherwise, you're just wasting your time. I've seen people go for a 1 to 2 or a 1 to 1. That means you're risking $1 to make $1. That's not going to keep you profitable in the long run. 1 to 3 minimum. If you want to go for higher, make sure you're taking partials along the way and you have a trailing stop loss. We only have 10 minutes left in our window of opportunity. That's the beautiful thing about both of these strategies. There's a window of opportunity. There's literally a time. So you know you're not sitting there wasting your time. For the blue zone strategy, it's an hour and a half. If you're not in a trade setup within an hour and a half, then you're out. With the spotlight strategy, it's 1 hour. And they're back to back. The blue zone strategy follows early morning from open all the way to 10:30. And then the spotlight strategy is from 10:30 to 11:30. That's it. For the people who already got that first trade in the morning, they're done. They're already off to work or at the gym or whatever they do. For anybody who's jumping in now, and a day like today, I've said this before, you usually want to use the early entry model for FOMC anytime you have any kind of high impact news drivers later in the afternoon. Because that way you'll at least get your move out. Otherwise they'll hold the market up. And they could hold the market up right now all the way until that news drops. And that's why our window of opportunity saves us. If we're not in a high probability trade setup, 70% or higher, by that time, by 11:30, that's it, we're done. Day trading is not everyday trading. Come back, fish again tomorrow. There's no news tomorrow and Friday. Nine minutes left in our stream. We will be recapping this morning trade on our Instagram, YouTube, and TikTok. Our handles are fractal.effects. Make sure you check us out at fractaleffects.com, where we teach high probability trading. Right now, we put together the most amazing package for you guys. Works out to be $50 a month when you break it down. We take the annual, $600, cheaper than a gym membership. You get the master class, our powerful indicator suite, live trading. We have partnered with a third-party signal service. They're using our same strategy. As soon as they enter trades, it gets pushed out and sent out via Telegram. You even get $15 off a TradingView subscription, which you can take advantage of whether or not you sign up with us at all. The link is just right in the package area. But this is the most back-tested strategy on the market, 20 years. And we have all that aggregate in our Spotlight dashboard. You can see that. You can see what this strategy did over the last 20 years. It's broken down to charts and graphs, and that gives you more confluence to let you know what it could do, because this is an algorithm. Algorithms repeat. That's what allows us to come in and do these moves. If this was not an algorithm and this was actually driven by consumer psychology, I would not be in the markets. People are erratic. You can't trust a market that's completely based off of that. Six minutes left in our stream. I don't think we're going to get that push up, or at least not that 5M fair value gap. So this is the last candle we'll be watching. We'll conclude our session after that. We'll be live again tomorrow, same time. Right now we're live Tuesday, Wednesdays, and Thursdays. Make sure you hit that subscribe button, turn on your notifications so you know when we're live. We're giving all this away for free, guys, all this information. Also subscribe to be entered in our contest to win a 6-month free trial to Fractal Effects. Coming back down to the blue zone. And that's how this indicator helps you realize where that pullback is going to be. As mentioned before, as soon as you get that confirmation, 80% chance that the market's going to retrace back down to one of our key zones. So all the people that were feeling greedy, trying to get up to the DSD high in one move, they got cut short right there. As soon as you see that confirmation, it's a good bet to just take partials and or move up your stop losses if you don't want to take TP entirely. Do we have the blue zone here? No, just short of it. We had an upside expansion model coming in from Asia to London. Now we have more of a trumpet model here, where New York is expanded and taken out both sides of London. That's not the best model. That's actually my least favorite model to trade, especially on FOMC. It means it could just gesticulate back and forth, taking liquidity. Or at the very least, the push will happen after our window of opportunity closes. 1 minute, 53 seconds left in our stream. So that's our time. They could just most likely hold this up all the way until FOMC. So that's why it's important to have a window of opportunity. As soon as that window closes, you want to be done.